Any outstanding of the current year we should add. Any outstanding previous year we should deduct. Premium received is income for the insurance company. So premium received, fire, it is 12 lakh. Revenue account. So why we are preparing revenue account? In order to identify the surplus. Operating expenses, again expenses of management is given. Hello my dear students, I am your Ajay sir, faculty Department of Commerce and Management, Vidhyaashram First Grade College, MYSURU, a temple of excellence. My dear students, in today's session I am going to handle the subject Corporate Accounting 2 for 4th Sem BCom, and the topic is Accounting for General Insurance. My dear students, in this type of problems will be asked in exam for 10 marks. Keep in your mind exactly, you will be having compulsory problem for 10 marks, and also for 15 marks you will be having life insurance, and also valuation of balance sheet for 10 marks. This is also for 10 marks. Now let's go to the problem. From the following balance sheet of Oriental General Insurance Company Limited as on 31st/3/2007, prepare fire revenue account and marine revenue account. We have to prepare fire revenue account and marine revenue account. Next one, provision for unexpired risk on 1/4/2006, where we have to take any risk. So it is opening or closing. This is opening. So opening provision on unexpired risk, where you should take in a premium schedule number 1. So there will be, you have to prepare 4 schedules here. We have to prepare 4 schedules. What are those? First one, schedule number 1, premium. Second one, so schedule number 2, claims. Schedule number 3, commission. And schedule number 4, operating expenses. And after that we have to prepare the revenue account for the year ending 31st. See, first schedule is the income, premium is the income, and remaining 2 schedules, claims, commission, and operating expenses is expenses. So why we are preparing the revenue account? We are preparing the revenue account to identify the current year surplus or deficit. To identify the current year surplus or deficit. If income is more than the expenses, that means income is more than the expenses, then it is a surplus. If expenses itself is more than the income, then it is called as deficit. So in order to identify surplus and deficit, we are calculating the from schedule number 1 to schedule number 4. That's it, we have to prepare. Now let's go to the first point. So fire and marine. So here we will be having fire and marine. So I have to calculate, while doing the problem we should have fire and marine column here. Okay, next one. So what is the additional reserve? So any additional reserve we have to take in the schedule number 1, premium. Schedule number 1, premium. Next one, for fire it is 10,000. For marine it is 24,000. Next one, claims paid and outstanding. So where it will go? Claims goes to the schedule number 2, claims, and we have, if there is any outstanding, keep this in mind, any outstanding of the current year we should add, any outstanding previous year we should deduct. Okay, any outstanding current year claims we should add. Okay, claims is we are paying claims, it is an expenses to the insurance company. So any claims of current year outstanding we should add, any claims of the previous outstanding we should deduct. So it is marine is, fire is 3,80,000 and marine is 7,60,000. Next one, commission paid. Again in commission also, any outstanding of the current year added, any outstanding of the previous year we should deduct it. So fire insurance 1,80,000, marine insurance 2,60,000 is given. Next one, premium received is income for the insurance company. So premium received, fire it is 12 lakh, marine it is 21,60,000. Keep this in mind. So out of the total premium received, we have to keep 50% of the premium. In case of fire it is 50%, we have to keep it as a reserve. We have to keep it as a unexpired reserve. So next one, for marine we have to keep 100% as a reserve. So we have to keep 100. It's a law, it is a rules say that out of premium what we have received, out of the total premium 50% we have to keep, because it is a, why we have to keep this reserve? Because it is a risk involved in insurance. So very much risk involved in the insurance business. So in case of fire, in order to avoid the insolvency or a bankruptcy of the company, so in case of insolvent or in case of bankruptcy, if the company could not pay the amount, then they can utilize this reserve. So that's why the company, as per the law, the company has to keep 50% of the reserve out of the premium in case of fire and 100% of the reserve in case of marine as a reserve. So they may give in the adjustment or not. So we have to keep it. So they have given here 50% and 100%. They have given in some problems they will not give this information, even though they did not give. According to rules, we have to keep this amount. Next one, management expenses. Where management expenses will go? Schedule number 4, operating expenses. Fire is 2,90,000, marine is 8 lakh. Next one, commission on reinsurance ceded. Where we have to take this one? Commission on reinsurance ceded. So we have to deduct commission on reinsurance ceded. If there is any commission on reinsurance accepted, we should add here. So we should add, if there is any commission on reinsurance accepted, we should add here. So if it is ceded, we have to deduct from commission. Keep this in mind. So you may get that point also in the exam. So if there is any commission accepted, add. Ceded, deduct. Next point. Now going to the adjustment. So provision for unexpired risk to be kept 50% from the net premium for the fire and 100% from the net premium from the of the marine. Why we are keeping 50%? Because compared to marine, risk is very less, or risk is lesser than the marine insurance in case of fire insurance. That's why it is 50%. The risk is more in case of marine insurance. That's why we have to keep 100%. So if any goods lost in the transportation, in the sea transportation, then the whole amount has to be paid by the insurance company. It is very, very risky. In order to avoid the risk, they have to keep some reserve. Next one, the additional reserve in case of fire insurance is to be increased by 5%. We have to show in the schedule number 1. We have to show it in the schedule number 1 premium. See, like this. So you have to show, see, add additional reserve out of the fire insurance. Add this amount to the total premium. Next one. So let's see the adjustment. So this one we have already calculated what is the total premium. Later we will calculate this one. Next one, additional reserve. Also we can calculate it. Now first one, premium received. So what is the amount premium received here? See, what is the premium received? Look at the premium received. For fire it is 12 lakh. For marine it is 21 lakh 60,000. So fire premium received, fire 12 lakh. Next one, for marine it is 21 lakh 60,000. Next one, reserve for unexpired risk at the beginning of the year. At the beginning of the year, what is the reserve? So let's see. So what is the reserve here? So what is our reserve here? Provision for unexpired risk, or reserve for unexpired risk he has given at the beginning of the year 5 lakh and 16 lakh 40,000. So let's take here 5 lakh here, add this amount, and later it is, this one is 16 lakh 40,000. So let's add this plus 5 lakh, it is 17 lakh. So next one, 21 lakh 60,000 plus 16 lakh 40,000 is 38 lakh. Next point, additional reserve. Add additional reserve. See, what is the additional reserve? He has given the additional reserve on 1/4/2006 is, in case of fire it is 10,000, in case of marine it is 24,000. Let's add this. So 10,000, 24,000, and let's write the amount here. What are the amount we'll get after this? That is the net premium. It is 17 lakh 10,000. It is 38 lakh 24,000. 38 lakh 24,000 is the net premium. It is the net premium. So out of the net premium, deduct reserve for unexpired risk, 50% in case of fire, and again 100% in case of marine. What is our premium received here? It is 12 lakh rupees. So in case of premium for fire, I'll write here So in case of fire, so it is premium received is 12 lakh. Premium received is 12 lakh. So what is the reserve? 50% minus 50%. So it is 6 lakh. 6 lakh is the premium. Again, so he has given one more adjustment. Look at the adjustment. So again, we have to keep additional reserve in case of fire insurance to be increased by 5% on net premium. On net premium, we have to keep 5%. So what is the net premium again? 12 lakh. So again, for this add 5% additional premium 12 lakh into 5%. So again, we will get, let's calculate this. So it is 12 lakh into 5%. Again, we will get 60,000. 60,000. What is the total of this? 50%. It is a regular reserve. Again, extra 60,000 is 6 lakh 60,000 in case of fire. And what is the in case of marine? Out of the premium received, out of the 21 lakh 60,000, we have to keep 100%. We have to keep 100%. So here it is. So this one is 6 lakh 60,000. This one is 21 lakh 60,000. Why I am taking 21 lakh 60,000? So total reserve on this amount we should calculate, on this amount, not on this amount we should calculate. That's why he has given in the, look at the question. See, provision for unexpected risk is to be kept 50% in case of net premium. What is net premium? This is our net premium. Actual premium received or total premium received is 12 lakh rupees in case of fire insurance. 21 lakh 60,000 is the in case of marine insurance. On this amount we should calculate the reserve, not on the closing balance. So deduct this. After that, whatever the amount is available, that is the actual premium. So this negative balance. So 17 lakh 10,000 minus 6 lakh 60,000. It is 10 lakh 50,000. Again 38 lakh 24,000. Deduct 21 lakh 60,000. So it is 16 lakh 64,000 is the total premium we received. Now let's go to the next slide. Claims paid and outstanding. Look at the claims paid here. So we have claims paid outstanding here. So it is 3 lakh 80,000, 7 lakh 60,000. So it is claims paid and outstanding 3 lakh 80,000 here, 7 lakh 60,000, and we don't have any outstanding in the adjustment. If they give any outstanding claim of the current year, you add it current year. If there is any outstanding of the previous year, you should deduct it. Okay, so now we don't have any outstanding, so this is the 3 lakh 80,000 is the amount, is 7 lakh 60,000 in case of marine. Now let's go to the schedule number 3, commission. So is there anything related to commission here? Yes, we have commission paid. For fire we have paid 1 lakh 80,000. For marine we have paid 2 lakh 60,000. Again let's add it here. So commission paid for marine 1 lakh 80, 2 lakh 16. So it is 1 lakh 18,000. It is 2 lakh 16,000. 2 lakh 16,000. Next one, deduct commission on reinsurance ceded. So if it is accepted, we should add it. If it is ceded, we should deduct it. So what is accepted commission on reinsurance ceded is fire insurance is 60, marine is 1 lakh 20. So 60 and 1 lakh 20, 60,000 and 1 lakh 20,000. Deduct this amount. Remaining is the actual premium. So 1 lakh 18,000 minus 60,000 is 58,000. Next one, 2,16,000 minus 1,20,000, 96,000 is the actual claims payable. Actual claims payable. Commission payable. Actual commission payable. Next one. Last one is operating expenses. What is operating expenses we have? So if there is any management, usually management expenses you will give. So any outstanding of the current year, you add it, any outstanding of the previous year. So it will be given in the adjustment. It will be given in the adjustment. Any outstanding of the previous year, you deduct it. So why we are deducting? We are only considering expense of the current year, not previous year. Okay. So management expenses we have 2,90,000, 8 lakh. So it is 2,90,000 and 8 lakh we are having. So any outstanding, look at the adjustment, we don't have any outstanding, we can directly write it is 2,90,000 and 8 lakh. So this is the total expenses of management. Now let's go to the revenue account. So why we are preparing revenue account? In order to identify the surplus or deficit of the insurance company. So it is schedule number fire and marine. So let's go to the first one. So first one is premium. First one is premium. So let's, it is schedule number 1. So what is the total amount of premium we got? So marine fire is 10 lakh 50, marine 16 lakh 64,000. So 10 lakh 50,000, here 16 lakh 64,000. Next point. So let's consider this as a point A or total A. Okay. So let's consider this amount as a total A, 50,000, because this is only income. Okay, premium is the only point which is income for the company. Remaining is expenses. So it is 16 lakh 64,000. So let's consider this as a total A. This is total A. Remaining is total B. What are those? Schedule number 2, schedule number 3, schedule number 4. Add it, we'll consider it as a total B. So what are those? First one, claims. Claims, schedule number 2. What is the amount of claims? 3 lakh 80, 7 lakh 60. So 3 lakh 80,000, 7 lakh 60,000. Next one, schedule number 3, commission 58,000, 96,000. Schedule number 3, commission schedule number 3. So what is the commission? 58, 96. 58,000, 96,000. Last one is operating expenses 2 lakh 90, 8 lakh. So it is operating schedule number 4. It is 2 lakh 90, 8 lakh. 2 lakh 90,000. Again it is 8 lakh. So add it, we will call it as total B. So it is 3 lakh 80,000 plus 58,000 plus 2 lakh 90,000. So we get 7 lakh 28,000. So there is a mistake here, we will rectify here. It is commission paid 1 lakh 80,000. If you deduct that, so we'll get 1 lakh 20,000 here. So 1,20,000. So again, let's write this is commission. So again here, so I am rectifying mistake here. So 1,20,000. Here it is 1,20,000. Now let's add this. So it is 3,80,000 plus 1,20,000 plus 2,90,000. So we get 7,90,000. Next one, 7,60,000 plus 96,000 plus 8 lakh. We'll get 16,56,000. So this is total B. Total B here. So again, if you deduct surplus is A minus B. So let's deduct A minus B is the surplus. So it is 10,50,000. So like this, see, 10,50,000 minus this one 7,90,000. Here also 16,64,000 minus 16,56,000. So we'll get the surplus. Difference amount is surplus. So 10,50,000 minus 7,90,000. The difference is 2,60,000. So it is again 16,64,000 minus 16,56,000. Difference is 8,000. So 8,000 is the surplus. So this is how we have to do the problem. See here, once again I explain. See, first one, look at the schedules. We have to write the schedules while doing problem only write the schedule. So schedule number, so any provision for unexpired risk in the beginning of the year, schedule number 1, additional reserve, schedule number 1, premium. So claims paid, where you get the claims here, see, claims, schedule number 2, claims, so schedule number 2, claims. And next one, commission, schedule number 3, commission. Again, premium, schedule number 1, premium. Next one, management expense, schedule number 4, commission on reinsurance. Again, you have to show it in schedule number 3, commission. So like this, you have to understand which item should goes to which schedule. Then only we can do the problem. So even in the LIC also, you have to by heart all the schedules. Okay. Next one, so look at the adjustment. What are the adjustments are given? So this is 50% and 100% is a rule. So they, even though they may give, they may not give, but we have to show it 50% of the total premium received or net premium. We have to 50% should be deducted as a reserve. We have to transfer from premium account to reserve account in case of fire insurance, 100% in case of marine insurance. Next one, if they give additional reserve, again out of the total premium, again add the additional reserve like this. So here premium received, next one add reserve for unexpired risk at the beginning of the year, again add the additional reserve. So in case of premium, you will get the net premium, again deduct the reserve for unexpired risk. So out of the total reserve, so 50% should goes to fire and remaining 100% is the marine insurance. Next one, reserve for unexpected risk is over. So whatever the amount we will get is the actual premium. Next one, claims. If you have any outstanding of the current year, we have to add it. If you have any outstanding of the previous year, we have to deduct it. Here also commission, outstanding of the current year, add. Previous year, deduct. Again, if commission is ceded, deduct. Commission is commission on reinsurance ceded, deduct. Commission on reinsurance accepted, add. Next point, operating expenses. Again, expenses of management is given. Any outstanding of the current year, add. Any outstanding of the previous year, deduct. Remaining amount he will give. All this adjustment will be given in the adjustment in the problem. So you have to look at the adjustment also like this. So later, so premium is only one premium is the income for the company, remaining 2, 3, 4 is the expenses for the company. Again, total, after doing total or after adding the amount, deduct A from B or B from A, whatever the difference we get. So if no income is more, then it is called as surplus. If the expense is more, then it is called as the deficit. Like this we have to do the problem. In the next session also we'll solve one more problem regarding the general insurance for 10 marks with no profit and loss account. Also 1 or 2 problems we will solve. Okay, in some cases or in some year they have asked some questions regarding the with the after doing the revenue account, sometimes you have to prepare the profit and loss account also. So in which case we will prepare the profit and loss. It is also small format, don't worry, it is very easy. So after doing this one we have to prepare the profit and loss account. If they give salary, outstanding salary or other expenses, depreciation, everything comes in the profit and loss account. If they give like this, how to solve the problem, that type of problem we will see in the next session. Till then, thank you so much.